Hey, hello, this is Martin from Secret, the channel for learning about trading and investing. Welcome to Daily Stock Market Analysis. And this is analysis for December 20th, tomorrow, Tuesday 2022. So, we had a market which was bouncing up today. Is this going to sustain? Let's look at the charts and see the answers for that. Seek the answers for that, probably. So, here you have the Nifty daily charts, and it shows a wide range bullish candle, but at the same time it's well inside the previous candle, so it did bounce up well. Banknifty also bounced up and formed a hammer candle, so green day. And this zone, if you had listened to the weekly analysis, is a support zone of previous breakout zone. From here the big move happened, so when the previous resistance acts as a support, it's known as change in polarity. That's exactly what has happened on Banknifty daily. And even the Nifty also, you can see that this zone is also a previous resistance zone from where a breakout had happened. So when the previous resistance zone acts as support, it's a change in polarity bounce. Now the only question is whether this bounce is going to sustain or not, for which we will have to see the levels, the previous resistances levels, whether it's and the moving average levels, right? Whether it's take out that. So as long as it's above the 20 moving average, things should be fine. But as of now, it's not the case. If you put in the Bollinger Bands, the price is having a bearish bias still. So if it climbs above the 18,500, 600 nearby zones, above 18,550, and it closes above that green, then it will be back to bullishness. But as of now, the Bollinger Band is saying that it's a sideways move that's happening. Very clear. Okay. The band is slowly contracting, squeezing as against earlier expansion. Nifty also is expanding without any stop since very long, and now it is showing clear squeezing or contraction that's happening, which indicates that the price is going to move within this range. So we need to worry about bearishness or bullishness only if that band starts expanding once again and price moves above that. In the case of Banknifty, this is having a bullish bias still, even though it's contracting, because it's above the median, that's a 20 moving average of the bands, the median of the bands, it's above that, so it is still having bullishness. So on a green day, the question of whether it will sustain can be answered only if there is expansion that is happening again, until it will be consolidating, or it may be moving up, but till when, right? So in Banknifty it's clear. It's having a more bullish bias, and there is a more likelihood if it is moving above the previous inverted hammers high, if the price is closing above that. But in the case of Nifty, just can't say. We can say that it is a good bounce or not, but would that bounce sustain is only after we have a green close can we say that. And if this sideways movement is changing or not can be told only if the price reaches the above bands when the band is expanding again. Until then, we will assume that it's overall a sideways move that may be happening. That's how we predict the markets. It's the best that we can do. So we basically gained 150 points today, wide range bullish candle, and we gained 194 points in Banknifty, which is 0.45. Other one is 0.83 in the Banknifty that we gained. So intraday it was kind of very volatile in the Banknifty with multiple V shapes in the 15-minute charts if you see, but eventually it was trending up. Nifty, it was trending up from the beginning itself till the end. Right, so Banknifty has got some hesitance, some volatility, some sell-off, some bear bull fight is happening. That's why we have a hammer which is larger big size. We're trying to move down, buyers are there and supporting and lifting it up. So the big size of the hammer indicates that. Change in polarity, we talked about that last day, and exactly that kind of bounce will happen. Both indices, if you look at the weekly charts, if you have forgotten or not known about this, we can see that we had a big breakout from a previous resistance zone, and then now there is a pullback of nearly 3.5%, 3.4% in Nifty, and only 2.5% of correction is happening in the Banknifty. So we have broken out. Now it is moved substantially and then retracing back. That retracement may not come back as much as the breakout zone. It can take small retracements and move up also. So you need to worry only if this falls back into the breakout zone or neckline of that trend line. As long as that does not happen, you don't need to worry. So that's why we study the support resistance level. So right, so that's what we are. Support resistance is not much has changed. 18678 and 778 resistance is upside, and 18351 and 18103 other supports downside. 262 also is a good support. So 18103 is a major support, it's a gap support also. Similarly, Banknifty resistance will be 43767 and 43984, and 42961 is a support, and 42740 also is a support. So we are talking about this previous swing lows, and wherever the previous swing high, swing lows, we mark it and then find the support resistance zones. Similarly, all these markings are all resistance on the upside, all these markings outside support on the downside. Bollinger Bands we studied already, it's clearly indicating sideways action. Momentum has actually still not climbed back, but there is an up move in the momentum that happened when the price moved up, but it is far away from the short-term momentum bullishness of RSI 60. It's not reached. Even Banknifty is resisting below the RSI 60. So momentum is improved, but still not bullish. Trend also. Trend, what has happened is trend indicator had crossed over to bearish zones on both indices, and that is having rising strength. More bearish strength is there in the Nifty, but Banknifty has got less strength in the bearishness. Right? That's what all the trend indicator ADX is. DMI and negative and DMI positive zones are indicating to us. VIX has cooled off. It has a spike of more than 4-5% last week, and today alone it cooled off to 13.5, 3.6% of VIX cool off has happened. And open interest data is indicating that we have a long build up that has come back. It was long unwinding Friday, which was bearish, and now it has turned to long build up. That's bullishness. That means the price OI is positive, bullish, and it can move further higher. But till where there is a resistance at near the 500 rounding number resistance, as well as the previous resistance, we have seen that. So that's one we have to watch out. OI is saying the support resistance levels at 18,300 and 19,000, 2-3 days more before the weekly expiry. This is for the weekly expiry of December 22nd, and 18,300 and 19,000. That's a very wide range. So volatility is expected by the rises. It is given a very far away resistance call rating. 90,000 is very far. So the market option writers are expecting that there is a possibility that it can bounce up violently upside. Let me just reconfirm that. I'm just curious why. Yes, the highest put right call rating is seen at 19,000. Very far from where it is. So that is, yeah, that may change in the coming days. Why may change. But as of now, option writers are thinking that there is a possibility of market violently moving upside also for some reason, right? 43,000 and 44,000. That's also a 1,000 point range for the Banknifty's levels, where the highest put and call rating is same. Put call ratio PCR also has improved today. From the 0.5, 0.6 levels, it has moved to 0.83 and 0.92. It's closer to the bullishness, you can say. So why in general is showing bullishness, but the range of the strikes with the highest put and call rating is far away, especially in the case of Nifty. Right? Sectors, if you watch, it was across the sector. Green was there except the IT. All sectors except the IT. Why did fall 0.5%? Otherwise, auto, pharmaceutical, everything, auto, pharmaceuticals and FMCG, they all fell less than 1%. That I have a doubt. It not fell, it moved. Let's look at that once again. The different sectors, they're all green. Did not fell. I'm sorry. Rose up, right? So that move was not big move. Less than 1%, near to or equal to nearby 1% of moves are happened. Or auto, pharma, FMCG, they all moved up. So basically all sectors moved except IT. Some flatness also thing. Which sectors are flat? Just the pharma sector was flat, but manager was just great. Now, if you see the different heavyweights, major heavyweights, you can see that except the IT stocks, which is the Nifty and the TCS, all of them moved up. Again, it is mentioned as fell, which is not true. Yes, yeah. So all of them. So only the IT stock fell, right? Only the IT stocks fell 1%. So near to 1% of fall happened in the Nifty and TCS, but all others had moved. So some of them moved greater than 1%. HDFC Reliance, Kotak Bank, they all moved more than 1% today. Right? But HDFC Bank and ICICI Bank, they moved only less than 0.5%. That's a kind of heavyweights moves at the time. So heavyweights in all, if you see, the bullishness can be seen in the HDFC Bank. And now the HDFC also has climbed back. So HDFC twins have a bullish momentum, and others are all rising up. And Infi and has fallen to the bearish zones. Right? Even TCS also was in short-term daily charts has got just fallen to the bearish zones, and Kodak was already in the bearish zones. It was trying to climb up, but it was resisting below the RSI 40. So a lot of heavyweights are in the bear zones. Right? Already 3, Kotak, Infi and TCS are in the bearish zones. ICICI maintaining the sideways momentum. Reliance also sideways. HDFC Twins is the only stock which is bullish. Right? So that's the thing. HDFC stocks are bullish. HDFC stocks are bullish. And that's only ones that are bullish, and bearishness is there in 3 major heavyweights. So it's a mixed bag, and only HDFC cannot hold the market for long. Right? So that's the trouble. So we'll see if this, these heavyweights are improving the coming days or not. Right? We'll have to check. Today's, as usual, the FIs small selling, not big. And that's what is happening since last several days. FIs was sold 500 crores in Excel cash market, and DISO bought compensate to that 687 crores of buying has happened in the cash market again. Crude oil has been rising slightly after having substantially corrected nearly 44% from the top. It's managed to maintain the price below 76, which is good. Dollar index has been falling, consolidating, sideways momentum 104.58, not too far from the all-time multi-decade levels, but it's fine as long as it maintains this level and does not shoot back to the 120 levels, right? But the thing is not that the USD INR, the currency pair, the rupee is not gaining much. It remains to be red. 82.59 is, it's flat and rising, kind of move is what is happening in the USD INR. So that is something that's not good. Gold has been consolidating after at a resistance zone after climbing that, within 11% or more earlier. So it's still it's taking its own time, sideways momentum. And SGX is flat, USD is also flat. Christmas times, people have gone on holidays, volumes won't be there, US market also may be the same. But the thing is, US markets are having a descending wedge pattern. It's at the bottom of that, so we have to be cautious on that. If you look at the weekly charts of any of the US major indices, this is the Dow Jones futures. You can see that it had hit the top of descending wedge and then fallen. Now trying to take a support here, but there is every chance that it can fall back to its bottom of the channel, right? Bottom of this trend, the descending wedge. So we'll have to keep a close watch if this is going to happen. This reversal is getting confirmed. We have to keep a close watch on that. That's something. If that is happening slowly, it should be fine. But if that is a big fall that happens, the volumes are less because people in the US are on vacation right now due to the New Year and Christmas and all that, right? Holidays. The major event is the jobless claims data is coming on December 22nd, Thursday, which is matching with our expiry date. So some volatility can be there if that's is turning out to be bad or good according to that. So you can expect that. That's only major event. Otherwise, Christmas holidays are there. Brokerage were less, as I said before. Two picks are looking good. GMR infrastructure long and Diamond Cement long, both from the infrastructure side. For some reason, infrastructure and real estate may be doing good. Look at these charts. It's a rectangle box pattern which seems to have broken out. There is a good RiskReward that you have if you keep the neckline as the stop loss, and there is a range shift that is seen here. The momentum has climbed from the sideways beautifully and taken a support of the RSI 40 and then bounced up. This is bullish. So that is GMR, and what else we have is Dalmia. So that is also a good pattern. Dalmia by this actually having a range shift, almost a range shift where it has climbed and taken a bounce, and there is a separate bounce up, and it is broken out of a channel, parallel channel, trendline channel, whatever we call it. It is broken out from that, and there is below resistance in the upside, but short swing trades and partial trades also can come in in the bull zones. Trend and DEC indicator, trend indicator also is bullish. So to fix EMR in for a long, LMS been long. Let's just wrap up what we have analyzed so far. So basically what happens is it is a bounce up, and the candlestick shows a bullish green, and Nifty and Banknifty has got a hammer, which a lot of supports on the downside. So both the bands are showing contraction, sideways consolidation is what it shows. But keep in mind that we have the medium term we are strong. Market is still not lost the momentum and the trend, but in the short term we have slipped and lost the momentum and the trend. We have the price less than the moving average also in the Nifty. Banknifty is better in that, but US markets have reversed more, volumes are less, so some kind of sideways to mild bearishness is what we view there. I mean, those may not happen this year, current real, I mean. So US markets are resistance, that is also another concern, right? Recession fears and all these uncertainties are there, but VIX is not reflecting that much. Market thinks that India is resilient, so VIX is less than 14. Today also it is cooled off after a small spike last week. Dollar and crude is good, but rupee is not strengthening. So levels to watch is 18,100 will be crucial gap support downside. 18,500 above close would be good. 43,000 and 44,500 would be upper and lower for the bank nifty similarly. So that might be a mild bearish to sideways consolidation overall. Overall, it's consolidation that's happening, even though it may be green or very skew small band. Up and down moves may happen, keep on happening until people are back from the vacations and volumes increase. That's what you just have to expect, right? Intraday, yeah, it may be moving up and down. For 2 days, it may go up and then go down. But as long as that range is what you have to keep in mind. The range we already is, we know from the Bollinger Bands, right? That's a view. So always protect your capital and have hedge positions overnight, and then use the options trading strategies for even investing as well, right? So if this has helped, this analysis, technical study of the market has helped you some way, it has brought some clarity on your trade plan, then please don't forget to subscribe and share it with your friends and colleagues, and we need more subscriptions and keep us motivated to keep doing that. So thanks for watching. Happy trading, happy learning. Bye bye.